Welcome to World Energy Television. I'm Richard Loomis, and today we have the privilege of speaking with Curtis Burton, Managing Director and CEO of Buccaneer Energy. Curtis, thank you very much for joining us.
Well, thank you for having us.
Well, obviously for the World Energy audience, you're no stranger. But for those just joining us, tell us a little bit about yourself. When did you join the energy industry?
I graduated from the University of Texas in '79 and joined the industry right away with one of the Halliburton companies and have been involved with the business ever since.
What would you say is probably the most exciting position you've held?
Starting and leading Deep Star for 5 years. Deep Star, as you may recall, was the industry event where we really developed a lot of the technology that made deep water financially possible. And along with that, I wound up having the opportunity to do some lobbying in Congress on deep water issues, and it was just a very rewarding, exciting period for both the technology development and doing some things that I felt were really important.
And the organization still exists today?
Absolutely. Deep Star's continued. It's smaller because there are fewer oil companies and service companies out there, but it's still continuing with that mission. The things that they're doing today, in fact, are outgrowths of the things that we did back in the early and mid-90s launched.
Well, tell us a little bit about what you're doing now.
We saw an opportunity with some of the things that were happening in the industry to go into a segment that seemed that nobody else was in, and make that a niche market for us, and that's just been very successful.
So the company was started 2 years ago?
2 years ago, and we drilled our first wells actually within about 4 months of starting up. Went public on the Australian exchange to raise most of our capital and actually started drilling wells with our own money. Had our first wells on production 17 days after we drilled them. We've just closed on a large facility, a $50 million facility with Macquarie out of Sydney, Australia, and are having a good relationship with them in terms of moving the business forward at a very rapid clip.
Well, tell me a little bit about how that happened.
We, as we got out, and there were a small group, this business model is a duplicate of one that I employed when I left Texaco back in the mid-90s after running Deep Star. I started an oil and gas company up with a very, very small group of people in Reading and Bates, and that was successful using a lot of the same techniques that we've had here. You
mentioned a small team. You're also talking about very quick turnaround on projects. How do you make those two balance?
Well, I think that's one of the things that's been unique both times we've done this. We've always had small teams, and one of the keys is getting people on the team that are, if you will, multi-talented and have more than 20 years of experience doing a job in an oil company. We like to have people that have 20 years of experience doing 20 different jobs.
You got 2 wells on now. You may drill before the end of the year 2, 4, possibly even 6 more wells. You have 8 people. Can you handle that kind of volume?
Absolutely. Again, it's a mindset of how you go about doing this. A lot of conventionally staffed and oriented companies, the answer to that would be no. They would need 3 times as many people. My approach has been, since when I did this back in the late 90s, was you don't need a guy on your staff that is a subsea tree expert in order to get a subsea tree if you need one to do a development. The guys that know the most about subsea trees are going to be the Camerons, the FMCs, the Drillquips, the other people out there in the marketplace. Why reinvent that? You need somebody to manage them. We've got managers, but you don't need somebody to go tell them how to build that tree. Typically what you see is a startup company like this will have maybe as many as 20 people on board, and which gives them a very high overhead, a very difficult environment immediately that they're dropped into to produce quickly to cover their overhead. We've got 8 guys on the payroll, and everybody else is outsourced. That makes a big difference. So $2.5 million, which is what we're realizing right now out of these 2 initial wells a month, is a
that's past cost.
That's
over and above
costs are taken out. Yeah.
We've been talking about wells that you drilled. What is the project you're working on?
Well, the cornerstone projects that were in the IPO were the Pompano field, which had a 1-well commitment with 6 total wells under the same terms. A Lee property, Lee County, Texas, which is a land deal. That is also a 1-well property, but could have as many as 3 wells in it by the time it's over. And then a property called Cove Deep, which looked to be a 1-well property when we originally did the deal. Since we obtained our funding, we've been out working the market pretty thoroughly, and we've added 2 the Pompano wells with another lease position on Pompano. We've also added a property called Jaguar, which is a look-alike to Pompano. We've added East Cameron 357, which is a property that is an oil-bearing property in fairly shallow water. We have about 8 other properties that we are currently still working on to negotiate deals with, but the net of all of that is that we have a good flow of properties to replenish things as we drill them, and the reserve base that we're looking at is very impact oriented. And all of these properties are low risk, multi-pay properties that most of which have some type of PUD.
The properties we've been talking about are offshore properties, but you mentioned Lee was onshore. Does Buccaneer have a focus?
It's got to be fast, it's got to be impact, and Lee fit that profile. We didn't have a 1.5 years worth of work to get Lee to a point that we could drill it.
You're talking about fast turnaround. Typically the offshore, particularly in the Gulf of Mexico, is not known for fast turnaround.
That's true. There certainly in our case, what we're focused on are properties that have, even for fast turnaround, have much better than normal. As I said, we drilled the first well on Pompano. It was online 17 days after we stopped drilling.
Now, how did that happen?
The infrastructure, again, it's a target. We went after Pompano because it already had about $15 million worth of infrastructure in place that we could take advantage of. We didn't have any liability for that infrastructure until we actually drilled a successful well. So it was the best of all possible worlds. The infrastructure was there. You had to do some refurbishment of it, but it was fairly limited, and as evidenced by getting it online in 17 days. So that is, again, the footprint that we're looking for. Jaguar, similar sort of situation. Platforms already in place, production in the field. We believe that we're going to be able to go back into Jaguar, re-enter existing well bore, and do some things and get some production out of it relatively rapidly now that it's been awarded to us. But again, the way you get fast production is you have to look at that whole picture. What can I do? Can I buy something that's already in place? And if I can do that, how do I go about drilling the wells in a way that gets them online as rapidly as possible?
We've talked a lot about this year. What do you see next year for Buccaneer?
Well, we are obviously very aggressive. We have added properties that are significantly larger than the ones that we IPO'd with. We are going to get wells online. We're looking forward to a very rapid buildup of what we're putting into the pipeline system from areas that we're allowed to work in at this point.
So go forward, you'll provide the hydrocarbons from the Gulf. Government needs to figure out what we're going to do next.
Somebody needs to be about that, for sure.
Curtis, this has been very interesting. Thank you very much.
Thank you for your time.